This is the Friday, January 20th, 2017 version of the Market Plus segment. Joining us now is Angie Setzer. Angie, welcome back.
Thanks.
Want to kick it off? We blew right over cotton during the program, and for that, I apologize, cotton producers. That's a crop with a lot of interest growing in the southern U.S. Prices were up a little bit on the week.
Yep.
What are your thoughts?
Well, I think you're going to see some strength. It's really interesting because cotton's been one of those markets that everyone's really talked down here recently. It's kind of like the wheat market, but prettier. I mean, wheat's pretty, but cotton's really pretty. This week we saw cotton export sales were 3 times the amount needed to meet USDA expectations. So there's obviously some demand there in the world. I think some folks are starting to grasp the fact that China, we have large global stocks, but it's just like, as we see more so than what we see in corn and wheat. China is sitting on 53% of the world's cotton. The question is, where are they holding all of it and what are they doing with it? So I think there's something there. The one thing that I am concerned about if we do see a continuation of strength is that you will see an increase in cotton acres in the south, especially in the Delta area, because we saw such a significant cut in wheat acres down that way. Of course, the weather is going to have to straighten out. We're going to have to get out of those dry conditions, and I pray that we do, to really pan out. But at this point, if cotton prices, they look to remain strong, I think in the short term, just based on the demand that we're starting to see, but I question what we could see happen if we do see a big increase in planted acres, which I guess at this point, just the rumblings that I've been hearing, a lot of folks in the south are looking to use cotton as another crop to kind of get that revenue coming in.
Cotton and peanuts, two crops that I've heard a lot about this year, more than I've heard in, well, at least the past 5 years I've been doing this show.
Well, I mean, you look at the wheat prices that most guys have gotten down that way. You look at corn prices, and most folks don't really, I've got some friends that I talk to in Georgia. I mean, will not pretend I'm an expert on what they plant down that way, but they'll tell you that they're not going to even look at soybeans. So you got to come up with something. And I mean, they're not going to be a dry bean grower. Right. You're not going to put pintos in Mississippi.
Not a lot of lentils,
I don't think.
Going in.
So it's something that they're going to have to look at.
Interesting. Now, on the program, I talked about the fact that we had a question from one of our viewers, Greg, in Amro, Wisconsin. And Greg asked a fascinating question. It's a question that really highlights so much of the intricate details that make up a market. And so I'm going to read Greg's whole question. You can see an annotated version or a truncated version on your screen. So this is what Greg wanted to know. He said, I am tracking the cattle prices, and today they are closing in on 121. With that said, Holstein steers are only bringing 80 to 85 cents in Wisconsin, finished Holstein steers, with colored cattle bringing 1 to 108. He wants to know, do you have any insight as to why this basis is so far off? Holstein is dominating in the dairy state, and it's tough to swallow a 35-cent negative basis. And in some cases, it's much worse than that.
Yes, in a lot of cases, it is much worse than that. So I actually feel great because I just was having a conversation with a customer of mine about this week, and he had said the very same thing, that his Holsteins were basically worth nothing compared to his colored cattle, because he does both. He's on a dairy side, and in the past he could load them up, and it didn't matter. So I'm going to try to avoid stepping on any political toes here by saying it. So if I say anything that upsets anyone in the industry, I'm not saying it to upset you. I'm just saying it because it is what I know. Basically, we had packers out there that were purchasing Holstein steers or purchasing Holsteins to bring into the cattle market and selling as cab, which is supposed to be certified Angus beef. Apparently you can, if the hide is 51% black, which most Holsteins you will find are 51% black, you can then sell a Holstein cow or a Holstein steer as a cab, certified Angus. So apparently, I would imagine those in the colored cattle group have discovered and caught wind that we are bringing Holsteins in to that market structure, and perhaps threatened, some sort of ramification, or indicated that that's not what they want to have happen with the brand.
Displeasure was
there
expressed.
There was displeasure. Yes, that's not what the brand was set to be. You have trained the consumer to want certified Angus beef. To me, most will tell you that you can feed a Holstein to taste similar to a colored cow. Those who raise colored cattle will tell you that is impossible. and that I am a hideous person for saying as such because, of course, Angus is better. I'm a Hereford girl. Let's just put it out there. So that's been the issue.
Yes.
Is the displeasure was expressed at that point. Then you saw several of the packers, the buyers out there, who had in the past been making it a habit of the 51% rule. Of course, it's not just hide color. The carcass is graded, everything. There's certain qualifications. You can't just say just because the cow had more black on it, it's going to be certified Angus. But now they're saying that no Holsteins are allowed to be put into this pipeline.
The packers have effectively said, we're just not going to risk
we're just
it.
Done. We're not. Yeah.
We're done.
At this point, we're done. So what that means is, yes, especially in an area like Wisconsin, you only have one buyer now who's willing to take a risk on that Holstein beef.
Yes.
And so it's really limited your buying capacity.
Yes.
Very similar to crop quality or something of that nature.
The market, the demand was pushed to one place. And the supply that was used to being negotiated to go extra places now is forced to funnel
just into that one place.
And as a matter of that, they're gonna it's
going to have to be cheaper. Yes. And so that's the unfortunate development that you're seeing for guys with Holsteins.
And so that is the development. And from my understanding, I was in discussions with a number of cattle feeders, Holsteins and colored, this past week. They made it sound like this is just going to be ongoing until we get this supply normalized or find additional packers.
Until we figure something out. And
take the risk.
You gotta credit, and I'm gonna walk on eggshells here. You've got to credit the certified Angus beef folks for building such a demand. You know, that you wonder how they've done it in order to kind of work that way forward with other food supply things. Because most of your uneducated consumers out there, if you put two steaks in front of them and said one was Angus and one was Holstein, they would tell you the Angus tasted better, and and perhaps in a blind taste test they may not. I don't know. Send the hate mail to Mike, not to me.
I'd be curious to, if any hog producers, specialty breed hog producers, I have seen a push recently at high-end restaurants advertising the Duroc breed. Duroc pork chops, Duroc bacon. I imagine that's a breed association that's following the Angus model. Great way to build a premium for your product.
You're building a premium for your product. You cannot necessarily fault them, but if you're one who is growing a very good product that is very similar in a lot of ways, and so that's what I laughed about with this customer of mine, is he has colored and he has Holsteins, and it's not like he picks George to put in his freezer once they all go to market. He just gets the beef from whatever, and I said, can you taste the difference? And he said, no.
And I'd put my money on a blind taste test with a corn-fed Holstein. That's a well-marbled piece of beef. That would be tough. Like you say, it's brand building. So, Greg, that's what happened. All these factors came together. Effectively, you've got one buyer, and they're taking advantage, as a business would, of that situation. Thank you for answering that, Angie. Next, I want to jump down to Scott in Barrington, Illinois. He's on Twitter at Scott Capingro, sorry, Scott. He's asking, is China pushing the early button on trade to test Trump? And I think he's speaking to the increase in tax on ethanol from 5 to 30% and the massive tax increase on imported DDGs, distillers' dried grains.
I don't know, because they started this distillers battle several years ago. So Trump wasn't even in the running at that point, or at the very least had not, a year and a half ago, no one would have assumed he was even going to become our president, even a half a year ago. So the distillers one is part of what they've been doing for a while. They say they have that large amount of corn over there. They're trying to get their own feed set up. The ethanol side of things I really question, simply because they need that extra alternative fuel. So I think they might be cutting their nose off to spite their face, but they're also trying to generate domestic ethanol production too. They have ethanol plants over there that aren't running at capacity. So I think they may be doing more of a protectionist, trying to build their domestic market more so than coming at us from a trade war standpoint at this point.
Potentially, as they do need, you hear about that toxic smog in Beijing. They need cleaner fuels. They might just be using this ethanol tax as a way to bolster their state finances. Bring in a little more revenue.
I think that's part of it.
So now we go to Philip, our buddy up in Ontario, Canada. He's on Twitter at Agrodome. He's got a lot of questions. We're going to hit just a couple of them. Sorry, Phil, keep them coming. He wants to know, is there any hope for Chicago wheat prices? You talked about it on the program.
There's always hope. It's wheat. That's what I always say at my grower meetings. I have my wheat growers raise their hand, and I say that right there is the most optimistic guy in the room. Everyone give him a round of applause. I come from Michigan. We have a lot of wheat. Phil's in Ontario. He has a lot of wheat. I do think there are some really interesting developments perhaps that could show up in the wheat market, especially in Chicago, with what we are seeing happen in the southern, the Delta, the southern soft red wheat belt, with dry conditions and the reduction in plantings. A lot of the wheat that went in to Michigan last year went in poorer conditions. A lot of it was mudded in. The last thing we really wanted to see. The stuff that went in early stooled out because we had such a long fall. So it grew perhaps a little bit more than what you typically like to see before going into winter dormancy. So I would say that at this point in time, I think the low is in wheat. And most of my growers at this point, we are optimistic enough to where we're looking for the higher $4s, $5 futures range to get started on pricing. So yeah, I do think there's hope. I think it might be a couple of years before we see $6 plus again, but I like to say that in the hopes that I'm wrong too, because hopefully that happens next month and I'll have happy growers.
Well, now let's see. So we've talked a lot about the acreage battle that is coming up. We talked about some of the decline in acres. Our next question, I want to go to Philip's third question. He's asked us, do corn prices have to go up or do bean futures have to come down to repeat last year's acres? We just heard that report. Bean acres, and this was a private estimate, projected to be more in this country than corn acres.
Yeah, for the first time since 1983.
I knew it had been a long time, 1983.
Yeah, 1983.
Wow.
So good year. I remember it not at all.
I don't either.
Yeah.
Are we going to see that? Is the market incentive such that we will see more bean acres than corn acres?
I don't think so. I don't know. I mean, I obviously weather will have the final say in everything. And I will say, living where I was at in northern Iowa, the anhydrous application this fall was down substantially from a year ago. Now, at the same time, I have to say in the same breath, our weather was not cooperative to anhydrous application this past fall. I mean, once it got cold enough to apply anhydrous, it started to snow. So you really had a much more limited window for application there, so that could have had more to do with it. I would imagine that we probably will talk big, that we will see a cut in acres and will see corn prices drive up to where we're above $4 as we work our way towards planting, only to get to March 31st and discover the USDA will come out and tell us, no, perhaps corn will be more like a 92 and beans will be more like an 88.
Okay.
That is just a number that is coming from me. That's not anything, that's not a research driven
no surveys
number. There has been
that.
no surveys. That's just Angie's mind. So, at this point in time, I don't know if we'll necessarily see it. But in the same breath, a lot of guys made seed purchase decisions in the late in the year, and we did see soybeans, the soybean to corn ratio trade at a 20-year high. So the potential is always there, but in the end, I think guys like corn, corn's that good, steady, reliable crop that you can produce a minimum yield on with reasonable weather, and beans can be a little bit more touch and go.
Banker might like to see consistency or at least a guaranteed return, particularly in the I states.
Yes.
Yeah. Final question for you, Angie. Every week, we like our analysts to define terms that get used quite a bit in the ag media, and we talk about the commitment of traders report quite a bit. Spec longs, versus commercial shorts. Could you explain to us the difference between commercials on the report and non-commercials?
Yeah.
What does that mean?
Commercial is like me. A commercial is an elevator. The non-commercials are your speculators, your folks that are outside coming into the market. So a commercial, whenever I buy physical grain, I sell on the board. So if you see a commercial short, that means that they have a pretty significant ownership of long physical grain. If you see a commercial long, that tends to mean that they have sold quite a bit, and they either do not have the physical sold or they have a bunch of unpriced grain perhaps on hand and have sold into the buyer side. Because if I sell to a end user, I then take a long futures position. So a speculator or the non-commercial is the speculative side. So if you see them short, then they're speculating that the market's going to continue to move lower. And if you see them long, then they're speculating that the market's going to move higher and they're going to benefit from it.
But eventually, if they're long, they'll have to sell
Yes.
to cover those positions.
Yep, it's just like digging a hole. So if you dig a hole and have a pile of dirt, you've got to take that pile of dirt to fill that hole eventually, and vice versa. You got to dig a hole to put dirt in. So.
Perfect. So commercials touch the grain in some capacity, end users usually. Non-commercials don't.
Yes,
They're buying and
exactly.
selling stuff they don't have and don't want.
Yes, exactly.
Perfect. Angie Setzer, thanks so much for taking the time to join
Thank
us
you.
this week.
Yes.
And join us again next week when Darren Newsom joins me at the Market to Market table. Plus, we'll look at how opposing forces found common ground fighting for the Mississippi River. And if you find value in our work, please consider clicking the Donate Now button on our website. So until then, thanks for watching. I'm Mike Pearson. Have a great week.